Around this month of the year, pollution levels suddenly spike in northern India, especially the Delhi NCR region. As I record this video, the air quality index here is above 400. That's extremely unhealthy, and I hope this gets better soon. Now, climate change and rising pollution levels are not just major concern in India but are worldwide, which is why green energy is such a crucial industry. Now, NTPC Green Energy, the renewable energy arm of NTPC, has come up with an IPO. The company is raising 10,000 crore, which makes it the third largest IPO of the year by issue size, after Hyundai and Swiggy. Now, given the importance of green energy in today's world and NTPC's parentage, should you invest in NTPC Green Energy's IPO? Hello and welcome to ET Money's YouTube channel. Today we will analyze NTPC Green Energy's IPO so that you can decide whether to invest in it. The IPO opens on the 19th November and closes on 22nd November. So there are only a few days available for you to apply for this IPO. Now what that means is you must watch this video to get a comprehensive idea of company and its IPO. The video belongs to our IPO playlist and I've included the link of it in the description. After you watch this video, you can explore it. Now this video is divided into certain sections which are on your screen. Okay, so let's first check the details of NTPC Green Energy's IPO. The details of NTPC Green Energy's IPO are on your screen now. The total issue size is 10,000 crores and as we discussed, this makes it the third largest IPO of 2024 by issue size. The full issue is fresh and there is no offer for sale or OFS. In a fresh issue, the money raised goes to the company, while in an OFS, it goes to selling shareholders. Now, the IPO opens on 19th November and closes on 22nd November, as we discussed a little while ago. The price band is 102 to 108 rupees per share, and the lot size is 138 shares for retail investors. So, at the upper price band, one lot will cost you around 15,000 rupees. Now, there are quotas for NTPC Green employees and NTPC shareholders too. NTPC Green's employee can apply for the shares at a discount of 5 rupees, with shares worth 200 crore being reserved for them. NTPC shareholders also have a quota of 1,000 crores worth of shares, which is 10% of the issue size. Now the total shareholding pre-issue is 750 crore shares. After the issue of fresh shares, it will increase to 843 crore shares. So about 93 crore new shares will be issued. So these were the IPO details. Let's now move to understanding the company's business and industry outlook. A subsidiary of the power generation giant NTPC, NTPC Green Energy was founded in April 2022 to collect NTPC's renewable energy sectors under one umbrella. The company primarily operates in solar and wind energy verticals. It is focused on developing a portfolio of utility-scale renewable energy projects as well as projects for PSUs and Indian corporates. Now, as of September 30, 2024, the company had an operational capacity of over 3,300 megawatts across 6 states and has won contracts and awards of about 13,600 megawatt. In addition, the company had 9,175 megawatts of capacity under pipeline. These are projects for which an MOU or term sheet has been entered, but definitive agreements are yet to be completed. So, overall, the company's capacity stands at over 26,000 megawatt. In terms of revenue breakup, renewable energy sales comprise over 95% of the company's revenues. Within renewable energy sales, solar comprises the lion's share of 91%. Apart from solar and wind, the company is also investing in hydrogen, green chemical, and battery storage capabilities and solutions, and associate technologies. Now, as of September 2024, the company had 17 off-takers across 41 solar and 11 wind projects. An off-taker is a party with whom the company has operating, contracted, or awarded capacity. Notably, almost all the capacity off-takers belong to the government sector. Okay, let's now look at the industry outlook. The annual solar capacity addition is expected to grow 3 times to 45 to 47 gigawatts by FY29 from 15 gigawatts in FY24. The expected annual investments in the solar energy sector can more than double from 1.1 lakh crore in FY25 to 2.3 lakh crore in FY29. Now, as far as the wind energy sector is concerned, the annual capacity addition is expected to treble to 8 to 10 gigawatts in FY29 from the current 3.25 gigawatts. Expected annual investments in wind energy generation are expected to more than double from 40,000 crore in FY25 to 90,000 crore in FY29. So, the outlook for both solar and wind energy is robust, and in general, the renewable energy theme has long legs too. That's why we published a video on how to pick promising renewable energy stocks. I have mentioned its link in the description. Okay, let's take a look at the NTPC Green's financials now. On your screen are the key financials of NTPC Green Energy. Since the company came into being only in April 2022, its history is rather limited. The company's revenue jumped from 171 crore in FY23 to over 2000 crores in FY24, a massive jump of over 1000%. The profit increased from 171 crores to 345 crore. That's a growth of 101% year on year. Now, the reason for a profit of 171 crore on a revenue of 171 crore in FY23 is a tax write-back of 119 crore. The profit before tax for FY23 stands at 53 crores. The cash flows from operations has increased from 17 crores to about 1600 crores. The EBITDA margin stands at a heavy 89%. Now, that's because depreciation and interest rate are the major expense items for the company, and these are excluded by calculating the EBITDA margins. The company's return on equity is a mere 5.5%, and net debt to equity ratio is very high at 2 times as of March 2024. Okay, now let's compare the company's key financials and business metrics with Adani Green Energy, its listed peer. NTPC Green Energy is much smaller than Adani Green Energy in terms of installed capacity, market cap, revenue, and profit. Its installed capacity is about third of that of Adani Green. Its market cap is over a third. Its revenue is just a fifth, and its profit is third of that of Adani Green. Now, NTPC Green's revenue and profit growth numbers are considerably higher. However, since the company started its operation only in 2022, one should wait for growth numbers to normalize and not read too much into them. NTPC Green's operating margin is higher than Adani Green's, but in absolute terms, both numbers are pretty high. That's because both companies' major expense items are depreciation and interest, which are excluded in calculating the operating EBITDA margin. So again, don't be carried away by high margins. Adani Green's returns on equity is quite high compared to NTPC Green's. But if you thought NTPC Green's debt to equity ratio was high, Adani Green's net debt to equity ratio at 5.5 puts it to shame. This explains why interest expense is a major cost for both companies. Now, in terms of valuations, both companies look extremely overpriced in absolute terms. Their P's are upward of 200 and their PBs are high too. In comparative terms, NTPC Green has a higher PE but a lower PB. Okay, let's now check some crucial IPO related metrics. In IPO investing, it's not sufficient to just analyze the business, industry and financials. One also needs to take a look at the important IPO related metrics. Now, we talked about these metrics in our video on analyzing IPOs along with some cool IPO hacks to increase your chance of success. I've included the link to the video in the description. Alright, let's check these important IPO related metrics in case of NTPC Green Energy. The first is fresh issue versus OFS. A IPO can have two components, fresh issue and offer for sale or OFS. In a fresh issue, the money raised goes to the company, while in an OFS, it goes to the selling shareholders. So the company benefits from a fresh issue, not an OFS. Lately, many IPOs had a significant OFS portion as existing shareholders looked at profit from a bull run in the Indian market. The Hyundai IPO, which was the largest ever IPO in India by issue size, was completely an OFS of about 27,900 crores. But NTPC Green Energy is different. The entire issue size of 10,000 crore is a fresh issue, and that's good. This money will go to the company and ultimately work for the shareholders. The next metric is objects of the offer. The reason for which a company is raising money matters too. In the IPO lingo, it's called objects of the offer. Broadly, if a company is raising money to resolve a crisis or a problem, such as a high debt, that's usually a red flag. If the company is raising money for growth, that's good. Now, in the case of NTPC Green Energy, 75% of the issue size, that is 7,500 crores, is indeed meant for debt repayment of its subsidiary NREL. That's a potential red flag. We discussed the high debt levels of the company in the previous section. Let's next check the outstanding litigation against the company and promoters. Outstanding litigation and the amount involved not just tells us about the governance quality, but also the financial penalties the companies may have to face should the litigation materialize. NTPC Green has 3 litigation proceedings going against it, involving a sum of 48 crores. That's not substantial. Against the company's promoter, NTPC, the litigation amount is over 5,600 crore. Most of the cases are criminal proceedings. But given NTPC's profit history, parentage and corporate standing, it's unlikely that NTPC Green Energy will be affected by the litigation against its promoter. The next metric is contingent liabilities. A contingent liability is a possible obligation that may or may not occur depending on a future event. So low to nil contingent liabilities are desirable. Now in this regard, there is little to worry about as stated by the company's RHP. Next comes share acquisition at a price lower than the IPO price. Now one way to know if the IPO price is reasonable or not is to look at the share issue by the company in the last 1 year. Now NTPC Green Energy was carved out from NTPC and incorporated in April 2022. In the last 1 year, the company has issued 278 crore shares to NTPC at the face value of 10. This appears to be a normal corporate action between a parent and its subsidiary. Next, let's take a look at some of the risk factors mentioned by the company. The company has mentioned 98 risk factors in its RHP. However, many of them are like disclaimers and standard statements. Let's take a look at some of the most prominent ones. First, there is a significant concentration in the company's revenues from a handful of customers or off-takers. Its largest off-taker is Telangana Discoms, which contributed almost 50% of its FY24 revenues from operations. The top 5 off-takers commanded 88% of the company's revenues and the top 9, 98%. Second, the company's suppliers base is highly concentrated too. Its top 10 suppliers accounted for 78% of its supplies in FY24. Third, 62% of the company's projects are concentrated in one state, Rajasthan. Fourth, the company's high debt is a concern and the company admits that too. Fifth, the company has significant capital expenditure requirements, which may require additional financing and which can increase the company's debt burden. Sixth, the operating history of the company's solar and wind energy projects is rather limited and the company is yet to prove its expertise. Now you can read the full list of the risk factors in the company's RHP. So these were the key IPO metrics that one needs to check out. Okay, let me now summarize the analysis in this video so that you can decide whether or not you should apply for this IPO. Let's take a look at the company's strengths and positives. First is the parentage of NTPC. NTPC is a leader in India's power sector and being its subsidiary, NTPC Green Energy will benefit from its parent's expertise and experience. Second is a booming industry. Renewable or green energy is a futuristic industry that's not faddish, is in need of the hour. Third, the company is on a rapid growth trajectory. As against its operational capacity of over 3,300 megawatt, the company's awarded and contracted capacity stands at about 13,600 megawatt. Its pipeline is another 9,200 megawatts. That provides a lot of revenue and growth visibility for the company. Fourth, after a long time, an IPO is fully a fresh issue, so the money raised will go to the company and benefit the shareholders. Fifth, the company's track record is clean in terms of litigation and contingent liabilities. Okay, let's now check the company's weaknesses and challenges. First and the most obvious is the limited operating history of the company. NTPC Green Energy came into being only 2.5 years ago. Second is the company's high debt, low return ratios and high valuations. But valuation should also be seen in light of the company's healthy portfolio and pipeline. Third, the majority of the amount raised is meant to solve the debt problem and a key risk factor for the company is the high capex requirements. So debt can continue to be an overhang. Fourth, the concentration in company's revenues, suppliers and assets can be concerning. And with this, I have told you what you need to know about NTPC Green Energy. Now it's your turn to tell us and your fellow viewers whether you will apply for this IPO or no. Do let us know in the comment section what you think and don't forget to like and share this video. I'll be back soon with another interesting video. Till then, take care.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.